watching Bloomberg Quint. The Reserve Bank of India has put out a revised stressed asset circular. This has come in place of an earlier February 12th circular which had been struck down by the Supreme Court. A brief mention of some of the key points here. One is that lenders have been given an additional 30 days as a review period before they actually start the clock on a resolution time frame. That resolution time frame has been set at 180 days, and if an account remains unresolved till then, there are additional provisions of 20% to start with which have been imposed. There are some incentives to ensure that banks continue to go to the IBC, and that incentive is in the form of a quicker write back of provisions. Joining us to talk about this in greater detail is Mr. V.G. Kannan, CEO of the Indian Banks Association. Mr. Kannan, thanks so much for taking the time to speak to us. Let me first get your broad overview of the changes that have come in. I know that the IBA was very much involved in putting forward the bankers' case to the Reserve Bank of India.
I think this is a much awaited circular. We have been waiting for quite some time after the Supreme Court had quashed the early circular on technical grounds. And it has also provided a lot of clarity to certain issues which we had raised. Overall, I would say we got a lot of relief as compared to the earlier ones. For example, earlier the resolution had started with a one-day default. That has been extended. That you can have a review period of 30 days before you can start the resolution plan to be approved. There are a lot of incentive and disincentives for an early completion of the resolution period. Disincentive in case there's a delay, and incentive to complete it so that the additional provisions can be reversed. There are certain other issues like the NBFCs were not earlier covered under the early circular. I think that has also been included. Last one, and not with the least, is the monitoring period where 20% of the loans had to be repaid before the account could be upgraded has been reduced to 10%. Overall, I think many of the asks of the banks have been agreed to. I think we are overall satisfied to a large extent, saying that the new circular gives a lot of relief to the bankers and the borrowers to come to a resolution at the earliest.
So a few specific points. So, that 30-day additional grace period, if I can call it, that has been given. Sir, I think the fear is that, you give more time, there's a little bit of laxity that can come into place. Are banks fairly certain that this does not mean that they will wait around for not just a first day default to happen, but 30 days after that and then start working on a resolution plan?
Sure. Technically speaking, even the circular it also provides for where there's a delinquency or where there is a feeling that the company will default in future, you can start a resolution process. So there's no bar for you to start the discussions on a resolution even before the actual default takes place. So that is already available under the system. And if you see, they have also provided clarity on the financial difficulty and asking each of the banks to prepare a policy as to how to define the default and how do you expect a delinquency in future, then take a call on a resolution process. So that has also been provided for in the system.
Sir, is this definition of financial difficulty clear enough? Can you explain to us how that will work, and is it any different from the way it was working so far?
No, earlier they said they just gave a very generic statement for financial difficulty, whereas they've given this 3-4 clauses where there's a financial difficulty. And using those 4 clauses, they can, and the boards can actually have a resolution saying that where the gearing is going up substantially, they can have a number to that. They can even say wherever the accounts are frequently becoming irregular, or where you fail the LC defaultments are happening frequently, though it's being repaid within 1 or 2 days. So certain signs can be actually put in the particular policy to indicate that there is a delinquency and also a financial difficulty. So I think all those things can be seen. If, for example, even though he has repaid the loan, he's not in a position to raise fresh capital, or he's not in a position to roll over his commercial paper. Those are all indications where which could actually lead to a financial difficulty, which can be used as a methodology to start a resolution process.
Okay, so this would be at a board level generically for all companies, or perhaps some sector specific conditions, sir?
All banks. No, banks will decide as to what will, banks will decide what is what is to be done, and then that will they'll prepare a policy for this.
Okay. So the other thing is the 180 days stays sort of from that 30-day mark. So total, I guess, 210 days. Now, if there isn't a resolution plan in place, there are additional provisions. How harsh to your mind is an incremental 20% provision after 180 days and 35% after 365 days? Is it harsh, particularly in the current context for PSU banks?
It could be harsh, but it was worse in the earlier circular, where you had to, after 180 days, you had to necessarily go to the IBC. Because what happens, for various reasons, resolution process need not necessarily be completed in 180 days. So what they possibly feel is, even if it's 365 days or 400 days, the additional disincentive for them to make provisions will act as an incentive for them to have a quicker resolution and sort of reverse the provisioning. And if there's some additional provisioning, and to that extent, the borrower also may have to pay higher cost, and that could also incentivize him to come to a resolution earlier.
Okay, so this, the incentive on IBC, you think is strong enough, sir? Provisions at 20% in some contexts may be harsh. In other contexts, when there is more capital available, they may not be. So you do think that banks still have enough reason to go to the IBC with accounts?
See, I would actually say not merely because of capital they'll go to the IBC. I think they will probably give a chance to the borrower. I don't think so any banker would like to only save the capital, but also to ensure that they are in a position to get back the amount which they have given. Because I think the idea would be to have a resolution process in place, and that will be the first incentive. But for some reason, if they are not in a position to have a proper resolution in place, I think it also incentivizes them to go to the IBC and get the provisions reversed at the earliest, in case they are in a position to get it admitted as also and resolved through the IBC process. If resolution does not take place outside, the only possibility could be a change of borrower, what you call the owner, and that may have to take place in the IBC process faster.
Okay. Sir, one question before I come back to individual provisions. So all of this, as you know, had started because of the power companies who had opposed the Feb 12 circular to start with, and then various other people joined in. So what changes for, say, stressed power accounts now under this circular versus under Feb 12th? So now banks don't need to take them to IBC if they feel that that's not the best route. But because they have already been non-performing for a while, they'll have to make the additional 20% provision, at least, if not 35?
In the case of power situation, the issues is beyond the control of the bankers. The issues are totally structural, and that is something, even if I give a relief for 1 year or 2 years, will not make any difference. Therefore, the banks would be asked to make additional provisions in case they do not refer it to IBC, and they will also have to make the aging provisions. So therefore, if a company has already been NPA for 1 year, they would have already made 25% provision. Therefore, over and above the 25%, they would have to make 20% and then another 15%, 35%. That is almost 60% provision have to be made. And if they go to the IBC, then they will get it resolved, or either way an action will take place under this. I don't think so. The circular has got any provisions for any sector identified to be given any relief.
No, I understood that. But so the 180-day timeline for these power companies, which are already stressed accounts, most of them would be classified as NPAs, that 180 days starts from now, from the date of the circular?
From today.
Okay, understood.
About 2,000 crores.
Okay. So a couple of the other specific provisions. One is this approval of resolution plan, 75% of creditors by value. That is fair. It's better than 100%, but it's actually lower than what is needed under the IBC.
Yeah.
Sorry, higher.
I think 60 and 75% is a reasonable number to expect them to come on board. And the RBI also mentions an intercreditor agreement to be signed between the lenders to the particular borrower, so that the resolution takes place quickly. And then they will probably meet and then look at a resolution plan and get it approved by 75%, which becomes binding on the others. And they've also made a provision for those dissenting people to be paid what's called the liquidation value and get out of the process.
Okay. So you mentioned the upgradation of the accounts. So now, after a resolution plan is in place, you can upgrade the account when 10% of the facilities are paid back. Have I understood that right?
Yeah, 10% of the facility, subject to a minimum of 1 year after the last loan, the longest the loan with the subject to the repayment of the first installment of the loan with the longest moratorium.
Okay. Is that a significant relief, sir?
Yeah, 20% to 10% is a big relief.
Okay.
Almost half of it.
Okay, understood. So they've expanded this to NBFCs. Firstly, is there any specific reason? Is it in the context of the current troubles that NBFCs are facing? And would it be largely...
No, I don't think it's...
Sorry, go ahead.
This was something which also something which was one of our asks, because in many projects we had NBFCs also having taken 10% stake and 15% stake, and they were not covered under the circular. Therefore, this sort of enables them also to come together and come to a resolution.
Okay. So last question again, back to the big picture. Should we expect that banks will ease up a little bit on their clients because the RBI has eased up a little bit on them? Or will we continue to hopefully see a slightly stringent credit culture which had seeped in the last few years because of the asset quality review and what followed?
I think credit culture, which has become, I would say, a bit more cautious, will continue for some time till actually new projects come up. The only thing relief is wherever there is a stress which is visible. The earlier circular had very, very stringent guidelines, saying, including the fact that after 180 days, if there is any default, you have to automatically go to the IBC process. I think that kind of relief will make the bankers and the borrowers work together to a proper resolution. If you see, the earlier circular also provided for full freedom to the bankers to arrive at a resolution in the first 180 days. But the fear was of a possible default subsequently, which could make the account to be directed to IBC, which is what many of the borrowers and the bankers feared. To that extent, there is another opportunity to be given with a new review period to find out this, in which case there, of course, additional provisions maybe have to be made.
And we shouldn't fear that IBC would not be a preferred route for banks, and that banks will try and sort of keep out of the IBC, because we do know that the early experience in IBC has meant a lot of delays for banks.
The earlier experience in IBC has been mixed. In a few cases, we got some resolutions because things are going on for on and on. We also had a change of promoters in a few cases, which is not generally been seen in India when we do a process outside the IBC process. But maybe the existing promoter also will work together with the bankers to find a resolution outside the IBC process, which will ensure that they may continue to be in control, may not be in full control, but they will be in a position to get a resolution process worked out satisfactorily.
All right, Mr. Kannan, thank you so much. Very kind of you, sir, to take the time to speak to us on Bloomberg Quint and share your thoughts on the new stressed asset circular. It used to be called the Feb 12 circular. I guess we call it, well, what is the date today? June 6th? No, June 7th. June 7th circular. Thanks so much for watching Bloomberg Quint.